Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:30, markets trading in the green, but since morning we've seen some choppy volatility on the markets. We opened up with good strength, made a new all-time high on both Sensex and Nifty, went down, and currently both Sensex and Nifty and Bank Nifty are in the green. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee, Dollar and crude oil. So Sensex is up about 100 odd points, 76,795 is the level on Sensex. Nifty up about 55 odd points, 23,345. And Nifty Bank up 100 points, 49,910 is the level on Bank Nifty. Rupee Dollar equation, Rupee trading week level is 83.49 rupees to a dollar. Weakness of about 0.11 paise, and on the crude oil, Brent is trading at about $79.86 to a barrel, and NYMEX is trading at about $75.74 to a barrel. A mild uptick, but nothing really serious. Let's hope that we will see some kind of moderation in crude oil prices. And of course, after the credit policy last week, we have seen some kind of range-bound movement in the Rupee Dollar equation. A range could be 83.60, and on the lower side we could see possibly 83 point. Lower side on the dollar we could see somewhere close to about 83.30 to 83.25. So that's going to be the broad range on the Rupee Dollar. And on the NYMEX and of course Brent, expect some kind of ease off on global news flows, which we are expected this week, along with the FOMC meet, etc. Other data points are there. Coming to the market, friends, last week I think it was a session which nobody anticipated. We had maintained cautious towards short to medium term, and we've been recommending to be a little bit careful when it comes to political events. And this one was a surprise one compared to what the anticipation and the exit poll had to tell us. And then of course the reaction of the exit poll we saw on Monday. We did connect with all of you all that time, and then on Tuesday the outcome from the results of as far as the election commission is concerned led to a lot of choppiness, volatility, social media, unconfirmed news flows, comments, statements made all the more volatility even at an elevated level. But then of course we did settle down. Last week after Monday's euphoria, Tuesday's meltdown, Wednesday, Thursday, Friday we have seen a smart recovery, and even this morning when we begin the trade for this week, we've seen some kind of positivity in the market. We will possibly see some kind of choppiness, volatility, profit booking at higher levels given the recovery from the lower lows of Tuesday, 4th of June, then followed up by the rest of the week last week, and of course this Monday morning. So now that the political event is put to rest, clarity in terms of government formation, as we saw yesterday with the swearing-in ceremony, along with Prime Minister, other respectable cabinet members, ministers took oath, allocation of portfolios, and then we'll be tracking the monsoon progress. Of course, it has come in with advance downpour, at least in the city of Mumbai and the rest of the parts of Maharashtra. Good monsoon, even in the statements of the Honorable RBI Governor, Mr. Das, he did refer to a very good monsoon season, which will possibly lead to decent agri production and livelihoods getting elevated to a higher level. So monsoon first earning season for this financial year, first quarter, will start ringing in from next month. IIP, GDP growth rate, etc., is what we'll look forward to, and of course the global news flows. So you can see some kind of a pullback, and one of the most important things I would like to highlight over here, friends, is the strength as far as our markets are concerned. I would like to possibly highlight upon this particular point, because we normally get worried about FI selling and what will happen to the markets. So even before the election numbers were out, we had seen and read that FIs had created some short position in the F&O segment. After the exit poll result and the final outcome of the election on 4th of June, that short position was built up to a higher level. But despite of all that, we managed to recover itself on 4th of June. Actually, if you go to see the lows that we had seen and the kind of recovery by the time the market closed on 4th of June, and then the momentum on the upside. So this recovery is is a result of domestic investors' risk appetite at an elevated level and their matured thinking in terms of investing in a market when this kind of a meltdown happened. Had it not been for the domestic investors' support to the domestic institutional investors, I think the picture would have been totally different and possibly even on the negative side. But the conviction, the confidence and the capability of purchasing and investing in that kind of diff, I'm sure most of you all would have read that there was a huge rush, especially on the online facility offered by asset management companies. The people were finding it difficult to invest because of the load that was there, and of course the reports after that. But coming to this point, our sense is that as the retail investors' participation grows, as more and more retail investors want to be a part of the Indian growth story by investing in either direct equity market or via mutual funds and lump sum investments, there will be a time wherein we'll be more and more comfortable as far as the sell side numbers from the FIs are concerned. So we don't need to really worry about that. And this number is only going to grow to a higher level of retail participation in the next 2 years, 3 years, 4 years, 5 years. So, and awareness is also there, friends. So I think this support is very important to the market if we have to find stability and face the titanic sell side situations from the foreign institutional investors. Having said that, friends, view on the Sensex Nifty, I think the way even today, if you actually go to see in the first 2 to 3 hours, market opened up, went down, and then there is again recovery in the market. So that kind of situation will be there. There will be choppiness and volatility. But notwithstanding the short to medium term volatility that will be thrown at us from the markets, long term is always something that is very, very advisable and more wealth oriented kind of a situation. We will again see that situation wherein short term, medium term traders will get caught in a very unpleasant situation. But at the same time, the humble request is that as and when you get short term, medium term profits in your trades, try to book that. And of course, one more advice is that don't take any one-sided position. Always hedge your position and go into the markets if you have that capability and confidence to go and do some trades in the F&O segment. Otherwise, I think investors' wealth creation is very visible in terms of clarity with a long-term time horizon. Onset of monsoon, like I mentioned, has been very decent. Let's hope that the continuity of onset of monsoon continues and we get a pan-India spread of monsoon, and that will elevate the possibility of the growth going up and the agri production going up. Policy meet last week by the Honorable RBI Governor, I think all of us are absolutely clear. As long as the inflation levels come down, it is not going to be very early to see the rate cuts, and it's a very prudent path of approach on the advice of Monetary Policy Committee that the RBI Governor is taking. So that is going to be an event to watch out for, and the likely possibility of inflation coming down with good monsoon is even at a much elevated level. Timing is something that we'll have to wait and watch, whether we get it by the year end to 2024 or whether we get a rate cut by early 2025. Notwithstanding all this, and with an anticipation that the first quarter earnings, which will come in from next month, will throw in more positivity, our sense is that markets are always great to create wealth, provided subject to you invest in fundamentally sound stocks. And every time when we interact with you Monday morning, we advise wealth creation. And wealth creation, today also we have 2 investment ideas. The first one is from the public sector. The reason why we are so optimistic about some of the public sector led companies is their valuation and the price correction and the opportunity. So keeping all that in mind, we believe power sector is something that will grow to a great extent. And one company which is government owned in this particular power generation category is NTPC, is one of the largest capacity in terms of power production. Adding new capacities and a possibility of hiving off its green power generating facility into a separate entity. These are all talks. This is nothing confirmed, but a possibility. So as and when that possibility comes, valuation and wealth creation will give tremendous amount of opportunity. So the first, and of course, given the fact that we will need more and more power, as consumption of power at an individual level goes up, as more and more manufacturing capacities are set up, as government policies start becoming attractive for foreign direct investment and the local companies to increase and invest in capex. So power generation is going to be a growth story for many years. NTPC is one of the stock which we've been positive for a very long time, and we continue to maintain that positive outlook on NTPC. The second one is more from a technology packaging unit, if you will. The name of the company is Mold Tech Packaging, and packaging is going to be the need of the hour as we go forward from here on. As elevated consumption level goes up, as affordability becomes more and more comfortable, as semi and rural India starts earning more income via their agri produce and the facility of direct cash transfer, both tailwinds may end up positive. And one of the most positive thing about this company is that it provides its products and services to across manufacturing and capable companies. And as we all know, end product has to be packaged properly for consumers to have a durable product for consumption. So this is a diversified company, and we believe that FMCG sector's performance will translate into positivity to companies which are into packaging, especially a company like Mold Tech Packaging. So these are two investment ideas, friends. Needless to say, it is a long-term investment idea on the fundamental side. You need to have at least 12 months, 16 months, 18 months plus time horizon in case if you decide to invest in NTPC and Mold Tech Packaging from a long-term point of view after doing a little bit of study or a homework at your level and at an individual level. Please stagger your buying. This is not BTST short-term, 3 months, 6 months kind of a time horizon. It is a long-term investment idea. Hope that we will be in a much better situation now that the political event is done and dusted. We will look at other big macro data points which will support the market's momentum on the higher side. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.